We've got our first caller for the day. Anil is calling us from Gurugram. Anil, hi, a very good morning to you. How can we help you today?
Yeah, hi, good morning. Actually, I'm looking for the review on the stock of Power Grid Corporation.
Okay.
I have this stock at the price of 260, 1500 shares I have.
Okay.
And like multiple project winnings and all these things are there with this corporation within these last 2 weeks.
Right.
So I'm looking like in the next 1 month, is it going to touch 300, 350, something like that?
Okay, all right. Anil, got your question. And you've made decent amount of profits in that one odd month. And I'll take this up with Gaurav. Gaurav, your view on Power Grid with regards to where charts are concerned. And do you think within that 1 month, it can probably touch 300 or maybe even 350?
To be honest, it looks quite difficult. What we have seen is, like I said in the previous call as well, that the indices are not doing that well, and the stock will have to come out of its own consolidation. And if you look at the start of 2025, the stock has been again trading in a range, and it's still trading below its 55 exponential moving average on daily charts. So a 50-day average has not been crossed, which is somewhere on 290. So in my opinion, there is a possibility that it may go towards 290 to 95. Once that sustains, then we can look for higher targets. But as of now, I would not place too much of a bet. And it's always better to, if you have profits on your kitty, then trim out certain profits as you are a short-term trader, and then you keep riding it. That would be the right strategy at the current juncture.
Okay, we'll take the next question on on Gravita India. And this is 328 shares that have been bought and an average price of 1,865. This is Harish Kalva, who's writing in from Hyderabad, and he's asking for the view. He hasn't specified his time frame, so I'm going to go across to you, Samir, on this one. 60,000 rupee loss at this juncture. Should he hold on?
Yeah, so you can hold on to the stock. Unfortunately, your person asking the question has bought this at extremely high valuation and high levels. So the stock has seen a huge run up if you go through a 2.5 year period from 400 to 2,000 plus, right? So what had happened is the valuation multiples had scaled up because businesses don't grow at 5x in 2 years, right? Very rare to see something like that. And the problem is that the valuations had gone far too high. Now, this is a business that works on recycling of metals, copper, zinc, and some of these other things. And they have factories all over in India, in Africa. And we believe the opportunity is great. They've been generating good ROEs, about 20%. They are increasing the capacities. They're putting in new plants. So all of the things are saying that, look, growth is there. This is a business that's going to keep growing. The profitability is going to remain. So we think it is a good stock, but a fair price is, unfortunately, like I said, he's bought it at too high of a level. So for him, he could probably stay invested and maybe average down if it comes closer to about 1,400 odd levels, and then hope for a target price of 2,000. We feel maybe over the next year, 2,000 is something that's achievable. At that price, if he's averaged and bought, he will probably be able to get out some amount of profit.
All right.